Hey, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 29th of December, 2023, guys. So, welcome, everyone. Welcome to this last session of 2023. Welcome to the last trading day of 2023. Welcome, everyone, guys. As always, we're gonna have a look at the markets. We'll see how the year ended for some of the instruments here. Before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us, and we'll try to help you and try to assist you. Now then, without further ado, let's jump into the charts. Let's see what's happening, how the year has ended for Nikkei. First of all, of course, as always, I look at Nikkei first. So, not much excitement here. I mean, we failed to move above this barrier. I kind of was talking about this one. That was the highest point of November, the 33,868. But I also had this 34,033 level, which is the highest point of this year. And this is, we will stay like that. So basically the highest point of this year. Let's have a look at the monthly chart. So basically, let's see where we have started off the year. Where's that January? Where's that January? So January, right, December was here. So January, we kicked off around here near this 25,887 level. So basically quite a decent gain here for Nikkei if you were in this index from the beginning. So basically you managed to probably squeeze a nice 29% gain from entering at the lows of Nikkei. However, entering at the beginning of this year in January. So basically that's the situation here. So nice 29.5% gain. I would say quite decent. Just by, let's say, going into Nikkei. But unfortunately, of course, we don't know that. We only find that out at the end. Was it a good decision or not? But look, because for example, if we take a look at the previous year, right? Where's that January? There we go. This is January. Yep, there we go. So if you would have entered in 2022 and you would run from there basically till December, it wouldn't be a very nice year for you. You would lose around minus 10.85. So okay, look, it's always a gamble, right? So this year has been quite an interesting one, I would say. So basically, let's see what's gonna happen next year. I'll get rid of this line just a sec and we'll jump. So for now, I mean, I'm expecting maybe some upside if we do pop above the 33,868 territory. I spoke about this already. So if we do clear that level and we push above the 34,000 as well, then congratulations, a forthcoming higher high will be confirmed, potentially attracting more buyers into the game. China 50. China 50 remained within the falling channel. So I was kind of hoping to see maybe like some sort of a surprise at the end of the year where we could see a nice break through the upper side of the falling channel. And unfortunately, yes, we stayed inside the falling channel. Now, it doesn't mean that everything is lost for the bulls here. No, of course we will be keeping a close eye on the beginning, in January, in the beginning, the first days of January. What's going to happen here? Will we see a break or not? In general, I have to say this, that as long as we remain inside the falling channel, the trend is still to the downside. So that means that we could still see this one drifting lower. However, as I said to you previously, my downside scenario is coming from around here, from around this 11,158. However, kind of reevaluating things here again. I would say I would already start looking at some lower levels if we do fall below the 11,275 territory right here, and then we could go from there. We could go maybe. Oh, well, let me get rid of this just a sec. Where are my favorite lines? There we go. So in a way, we could then target the lowest point of December near the 10,985 zone, which is roughly around that 11,000 mark. And if that gets cleared, of course, a forthcoming lower low will be confirmed. But first, let's not rush into things. First, let's see what's going to happen here with the upper side of the falling channel, and then we'll decide from there. The way China 50 wasn't a very good year, if I'm not mistaken. Yep. So basically, we kicked off the year. Let me just grab a horizontal line. So it was from around here, basically. Yes. So that's where we started the year. And basically, initially, January was a success, but then everything started falling apart. In general, it wasn't a very good year for China. Economic wise, I mean, of course, as you know, all the problems with Evergrande, basically the housing market, and the problem still remains, just that the government is really supporting that sector. So, okay, we'll see how long that will run. But of course, yes, I mean, it wasn't a very good. So a year, so we kind of lost around, let's say, 14% roughly from the beginning of this year. So not a very good index to be in this year. ASX 200. So while I'm on this one straight away, look, okay, sorry, I have to go from the beginning. So look, we've created a nice all-time high here, and yes, we cleared that 7,600 zone. We popped higher, and we stayed below the 7,600 zone. So basically, this kind of just points out the significance of this barrier, and I think that I'll drag this highlighted zone right here. And I think that, yes, this is the one that I'm going to be keeping a very close eye on going into 2024. If we do pop and stay above this area again, then yes, we'll go further north. This year has been not a bad one for ASX 200, basically. However, let me just have a look. Sorry for the runny nose a little bit. So it was a bit of a roller coaster ride, I would say. So where's that? January. There we go. So it was a little bit of a roller coaster ride here. So basically, as you can see, we pushed higher. Then at one point in October, everything started falling apart, and we thought that, hey, that's it. This is where it's going to end the year. But no, the Christmas rally came early, and we basically managed to gain around 8%, something like that. So in a way, decent result. If you've been investing in all indices, let's say separately like that, you would still end up with a nice good gain. Now, so for now, I would say this way, that we are all keeping a close eye on this barrier right now. As you can see, it's if we can clear down the 7,600, then yes, of course, I will get more excited with the upside, and I will go further north. In terms of the downside, I would like to see a drop somewhere below this territory, below the 7,529. If we get a nice drop below, then yes, great. More sellers here could join in, and we could target some of these lower levels. But again, first of all, I need to see a drop below this territory somewhere here, below this upside line, and then yes, I'll consider a move lower. Oh, by the way, before I go further, as always, good morning in the chat room. I keep on forgetting this one. Good morning, everyone. There we go. So I hope everybody's having a wonderful start of the end of the last trading day. So yeah, jumping into Dow now. This one is interesting. So far so good. If you remember, if you watched my video yesterday and last week, of course, as well, that I was talking about this one. Look, we have this 38,000 mark, right? 38,000 and kind of 31, roughly 38,000. So we keep on bouncing around it, and moving around it. And yeps, I mean, what I said to you as well, that I have this Fibonacci, out of curiosity only. Don't really focus on it too much. This is something that I have in my mind and I have in my head, and I know I want to see if this is going to work out or not. Now, what I'm looking at here is, like I said, I'm looking for that 23.6% retracement on the Fibonacci, but I don't have the peak yet. So I'm trying to guess where it could be. So this way, because we like symbolism and we like these nice, beautiful numbers and these coincidences, I would say, you know, an alignment with some levels. So that's why I've put my 23.6 near this level. At the previous all-time high, which was reached in January of 2022. And yep, we've cleared that, and maybe that could be seen as a nice, good target here for this index. But first, again, let's see if that's going to work out or not. First, let's see where we're going to find the peak. At the moment, I'm kind of aiming a little bit higher still. We can see that we're still drifting north. Yesterday, the indices closed in mixed kind of. They're all closed mixed. So I mean, I would say even actually flat. So Dow remained in positive territory together with the S&P, but NASDAQ, for example, declined. So yeah, it's a little bit. We're unsure what's going to happen here further, but at the moment, yes, I'm still aiming to the upside. I know everybody's tired of that upside, to be honest. However, it is what it is. It is still moving higher. It still wants to go higher. It seems like that. Eventually, it will have to go down. Don't get me wrong, but when will that happen? I don't know. Maybe today, maybe like it will be the last trading day of this year, and we'll go with a bang here to the downside. However, I don't want to rush into things yet. So first of all, I am keeping a close eye on this. So I'm aiming a little bit higher here. My target here is around the 38,190 zone, something like that. So that's on the futures, by the way. On the cash, you might have something else, but you can easily apply the same logic here. You draw the Fibonacci extension from the lowest point of March of 2020 to the highest point of 2022, and then to the lowest point of October of 2022. So, or I should say the lowest point of October, the lowest point of 2022. So from the lowest point of March 2020 to the highest point of 2022 and to the lowest point of 2022. So yeah, roughly something like that. And you can check it out. But again, that wouldn't give you this level, which I have here, the 38,190. The reason why I have it here is just because I have drawn the Fibonacci this way. So let's see if that's going to work out or not. The S&P 500. Oh, by the way, of course, looking at the monthly chart, let's have a look at if we would have gone into this one at the beginning of the year. Where is that? January, February. This is February. Yep, there we go. So if we would have done that, how much we would have gained? We would have gained around 13.5%. So far, maybe 14 we could squeeze. I don't know, but let's say 13.5. Decent result, I would say. Good result. But yeah, I mean, look, I don't know if how far this is going to go further, but let's say if you would have been investing into this one from January of 2022, well, basically you wouldn't gain that much, because basically you would lose. So yep, how much you would lose? You would lose around this is the close, around 8%. So minus 8%. Okay. Look. Now then, let's have a look at the NCL Soriano 100. You should trade with liquidity. Okay, I will. Thank you. But look, coming back to the S&P 500 here, the same situation. I mean, it's still pushing higher. It still wants to go higher. Then, I mean, as long as it remains above this 4,830 zone, that, I mean, I'll continue targeting the upside. So, long story short, look, I'm not saying that, this will go further north what's the word for that? Like just continue going further north? No, because eventually it will have to reverse lower at some point. At the moment, look, what I said to you previously yesterday, that if we do fall back below the 4,808 zone right here, then yes, I'll consider a larger correction to the downside towards the upside support line drawn from the low the 10th of November, and then we'll go from there. So yeah, looking at this, I mean, like I said, this is the same story as with the Dow. I mean, it did make a nice gain. Let's see how much we've gained. Let's say could have gained from the beginning of this year. This is January, so this is on the S&P. S&P is a little bit better. There we go. Yes, the S&P performance. Wow. Quite a good one here, as you can see. So 24.5% roughly, or let's say 24%. So good result on the S&P 500. So yes, at the moment, my question is actually how far it will go, because looking at this structure, I mean, I am really kind of looking at maybe a possible head and shoulders, or sorry, not head and shoulders, double top pattern, with the neckline being here. But that means that this upcoming year should be a downer. We should see a move lower. But again, a drastic drop like that, okay, we need a correction, don't get me wrong, but how big of a correction would that be? That's always a question, you know. But look, at this point, at the moment, we can go slowly with this one. You know, we just apply short-term analysis at the moment, and in a way, there is potential, of course, for this one to correct lower, but some confirmation is still needed. So before I will get so excited about that downside scenario, I need some confirmation. For me, at least, a drop back below the 4,808 zone here could start the discussion about the downside. NASDAQ 100. So I've drawn this potential head and shoulders idea, but somehow it's not really working out very nicely. But hey, maybe it will. I don't know. Let's wait and see. Maybe it'll end up being something like this. So at the moment, look, we're struggling to go further north. It seems like that, because again, I understand it's the end of the year. Let's see what's going to happen in January. At the moment, I can say this, that we had a good run, of course, fantastic run from January of this year. Where is that January? This one's January right here. From January this year, I mean, we've managed to gain on the futures here roughly around 50%. I mean, wow. So the technology sector did drive the index. I mean, or drive the market in a way, with all your Nvidias, with all your Googles and Metas, and all your Microsofts, with their AI and stuff like that. So yes, everybody got crazy and everybody jumped into technology. However, look, I mean, I don't know if the AI thing is like the new bubble, like the .com bubble we had in the 2000s. Of course, we can only speculate, but everything's way too good to be true. It seems like, everything's way too good to be true. I think that there's still a lot of flaws in all that system. So and to be honest, recently I saw who's suing Microsoft now for plagiarism or something, or copyright. I think it was Wall Street or somebody suing Microsoft. I think it was Wall Street. I think the Times. The New York Times. There we go. The New York Times are suing Microsoft for copyright work. So, okay. So basically, that's what I'm saying. So, at the moment, everything looks nice and dandy, but actually, we need to take everything with a pinch of salt. So once the hype becomes so big, eventually it goes down, because you create hype, you get people, you start seeing people, less informed people, jumping on the bandwagon, and then you know it falls apart. So yeah, just I want to say, be careful. I mean, look, we are at our all-time highs and we're at the peaks, and I mean, to invest into when you're at the peak, I think that's, you know, that nobody does that. So that's why I'm saying that, you know, be careful, because again, the market needs a correction. Even the big money, you know, doesn't invest at the peak, so everybody waits for, you know, everybody wants value. So how can you find value? How do you know how much more it will go higher? Maybe it'll go just 1%. Maybe it'll go another 50%. Who knows? So, but it's always easier to invest in when the, let's say, the stocks did decline, had a good correction. So that means that yes, we need a correction. We need to see something like that. So let's wait and see and then we will go from there. So coming back to Dow, Nasdaq here, then yes, for me, I would like to see. If we do fall back below the 17,073 territory here, then yes, I will consider a bit of a correction back down. The German index, let's see how that one ended, and I think yes, it will end the year this way, so it will stay in this little range. So yes, I mean, at the moment, the same analysis will apply as I said yesterday. I need to see a clearance through one of the sides here of this little range, either a push above the 17,000 mark right here, or a drop below the 16,811 in order to go, or in order to consider the next short-term directional move. At this point, I'm just observing the price action. Yes, I want to see what happened, how this year ended up being for the German index here, the futures. So where's my line? October, January. No, that's January. So good run. Yes, good result. Let's see how much roughly. Around 23% we gained. If we measure it to where we are right now, so 21%, roughly like that. So, okay, good, decent result, 21%. So let's see how this year is going to end, but most likely with a 20% gain, unless something drastic happens today. Honestly, like a collapse of some sort, then yes, maybe we'll see some, you know, a trimming of those gains, but I don't think so. I think that this move might be left for January. At the moment, I think that the year will end this way. It will remain in this territory. But again, who knows? We still have the European session to go through. So the last one this year. So let's wait and see. The FTSE 100, guys. So the FTSE 100 is... yes, it's still doing the same thing. I mean, it's stuck, not much. The UK has a short day today, so basically they have an early close. So if you are trading the FTSE, then just be wary of that. New Zealand, I mean, they've closed earlier. Yes, I mean, they're already closed. And certainly what we are watching here today, we do have some data, but not from UK. From UK, we got the nationwide HPI, which came out lower. Okay, that's interesting. So, but that's it, kind of. I think that there is some data from US. Chicago PMIs are coming out, but nothing major. Let's jump into the US dollar. There we go. We had a bit of a nice reversal. Look at this level. I've marked this yesterday. I said to you, look, this is what I'm going to be aiming for initially, 100.32. Boom. Fantastic. Beautiful result here. Beautiful test. Beautiful rebound as well. Now, look, the dollar is not feeling very well, of course. We can understand that. And it's all due to talks of the Fed kind of potentially cutting 3 times before mid-2024. That, of course, is not very good for the US dollar. And this is what we were seeing here. No more rate hikes. And yeah, that's where we're going lower. However, as I said to you yesterday already in my big speech about the Fed, that look, the Fed is initially said that they will cut 2 times, twice. Now they're saying they're going to cut 3 times. So if they see that, for example, the US dollar is declining further and we see a rise in inflation, they might not go for a rate hike. They will just say, oh, you know what, instead of 3 potential rate cuts, we'll go for 2 potential rate cuts. And this could help stimulate the US dollar. We could see it pushing higher. We could see the stock market, drifting a little bit lower. So, yeah, in a way, that could be the game plan here. And it's basically without doing anything, you're actually doing something. So, you would be able to control the acceleration of the stock market. You could also help boost the US dollar. Okay, let's see if that's going to happen or not. Time will show, of course, but at the moment, this is kind of my idea. Let's see if that's going to be something that will work out or not. But anyway, coming back to this situation here with the US dollar, look, if you want to see some lower levels from the technical perspective, yes, we need to see a drop below the 100.32 territory, somewhere like this right here. Then forthcoming lower low will be confirmed, and we could see a drift towards the current lowest point of this year. And to be honest, I think that it will stay like that. I doubt that during today we'll see like a major sell-off here or something like that, where we're gonna go and test the current all-time, well, sorry, not the all-time, the current lowest point of this year, and maybe even surpass it. No, that's I don't know what has to happen, honestly. Like the last day, I think it's gonna stay somewhere around here, and maybe January could be a little bit more exciting month for that. In terms of the upside, if you're looking for some higher levels, maybe at least in the short run, I would say, then let me just adjust my arrow here. Look, any move higher could still be classed as a temporary correction before another possible leg of buying. And at the moment, I think that if you are interested in, let's say, trying to figure out a level for let's say from where to consider a larger correction to the upside, then I would say maybe this 100 zone, 101 territory could be a nice one. So from here you could start looking at some higher levels, and then a push above the 101.07 also could kind of stimulate that buying interest. We could see maybe a test of this little tentative downside resistance line, and then we would go from there. Now, in terms of the downside, yes, a drop below this 100.32 territory is required here in order to go lower. Gold. Now, gold yesterday managed to reverse to the downside. Okay, that's good, because again, we had this fella pushing higher, and if that fella will continue pushing a little bit more to the upside, maybe we'll see a nice push further to the downside here on gold. I talked about this yesterday. I said to you, look, this 2019 zone, that's what I needed in order to see a move higher. So pop up of this barrier would be nice. And if we do kind of stay below the 2081 zone, I'll continue kind of examining the downside scenario. Now, this is what I said to you yesterday, that if we do fall back below the 2081, I will consider a move lower. And this is what happened. We did fall below this hurdle. We did move to the downside. And to be honest, as long as we stay below the 2081 territory, which is, by the way, the highest point of May of 2023 of this year, then yes, I will class, maybe like I'll see this one, maybe we can apply the Fibonacci and go for a larger correction. So as you can see, if we measure it this way, then we already did the 23.6. So maybe we could go and test the 38.2 or maybe the 50% retracement in the Fibonacci. But okay, we'll go slowly with this one. But if we do measure it this way, for example, then we still have some room for that 23.6. So I would normally, I do like the Fibonacci's, but at this point, I don't think that it's the best tool to use. So that's why I would say for now, let's keep it simple, and let's see if we can apply maybe this. There's an upside line here, which I need to fix a little bit. So there's an upside line here, which it could be something that we could monitor, and then yes, if that gets broken, then this could open the door towards a larger correction to the downside here. Maybe we could end up even going towards that 50-day EMA. In general, I would like to see a move towards the 50-day EMA. That's currently around that 2014-15 zone. So good potential target, but hey, let's not rush into things. Let's mark this one here instead, the 2015 zone. Yep, and then we will take it from there. But at the moment, I'm kind of leaning still more towards the downside as long as we remain below the 2081 territory right here. If we pop above the 2090, I am going a little bit more to the upside. Silver, there we go. Beautiful correction on silver. We drifted lower, and look how well this Fibonacci continues to work. So this is the point where Fibonacci does work, and it does provide, you know, good levels. And the 38.2 retracement, this one, because initially it was measured from the peak of the high, basically from the highest point of December to the lowest point of December. We did get that retracement. We got a retracement all the way to 61.8, and then we look at this perfect test and a reversal back down. Then yesterday I said to you that we are oscillating, for now we're oscillating around the 50% retracement here. So okay, that's absolutely fine. And then I said to you that in order for me to go lower or higher, so for the lowers, if I want to go lower, a drop below this 38.2 here isn't required. Around here we have the 50-day EMA as well, shown as the red line. If we do fall below this, then yes, I will consider a move towards the 100 and the 200-day EMAs, and then the 23.6 could be the next target. Now, in terms of the upside, yes, a push above the 61.8% retracement here on the Fibonacci is required in order to go higher. On my chart, that's roughly around the 24.62 territory. Oil. So this one is a mess. And yesterday I've talked about this and said, look, as long as we remain above the upper side of the falling channel, I will continue targeting the upside. However, I would like to see a push above the 50-day EMA in order to get a little bit more comfortable with the upside. Now, oil is drifting back down, and yes, this is not really working out well for the bulls because it fell below the 72.38 territory. I talked about this hurdle previously. I looked at it as a good barrier of resistance, in which, if broken, could open the door to slightly higher levels. It did, and now we were falling back below it, and we were falling back inside the falling channel. Now, something that I also wanted to tell you that. Basically, looking at the weekly chart, not the monthly, weekly chart, I said to you, look, keep your eyes on this, because for now, on the weekly chart, you can see clearly that it seems like a false breakout. So that means that there could be some more downside for oil. And of course, oil did not perform very well this year. Let me just grab this line, the horizontal line. Where is it? Where's that? January. So yeah, there we go. So this is where we started off the year, and yep, it was roughly around that 80 zone, something like that. 80.53 something. Yes, there we go. So we fell below that hurdle, and yes, I think that we will end the year this way. Now, also something that I wanted to show you is that on a weekly chart, you can see it better. This upside line, which it looks like a horizontal one, but no, it has a little tilt on it. So this upside line, if that gets broken, guys, this opens a new chapter, you know, for oil to drift into maybe towards the 50s. But look, some of you might say, but oh, hey, that's great. That's, you know, that's great. It'll be cheaper for me to you know, to fill up at the gas station. Well, or the petrol station. Well, yes, in a way, that's true. If you still have a job, then yes, because in general, you know, a fall in oil shows a slowdown, economic slowdown. So if there is an economic slowdown, that means what? You know, some companies maybe are suffering actually. So they need to kind of think about it this way. And the moment, we're going into 2024. As I've mentioned, I think a while ago, or maybe this is I've mentioned this in an article which I wrote, which is going to keep coming out on our website here. You can find it in the section and about in company news section here, and there will be an article here coming out today. If we're going to release it today, basically, where I mentioned that I'll kind of give my outlook on the 2024 year, and basically you can read about it there, but just kind of roughly, I would say that we're going into this cycle. If we judge the market from the presidential election cycle, then yes, the last year, in a way, it's kind of seen as a bit of a downer. So that's why there is a potential for a decline, and everything, all the stars are aligning kind of at the moment towards that idea. But let's wait and see, of course. What do I know? I'm not Nostradamus, so so yeah, coming back to this situation here, oil, I think that it will remain below. If it remains below the 72.38 zone, yes, I'm leaning towards the downside. Let's jump into natural gas very quickly because I still have a huge list to go through and not much time. So natural gas. Trying to push higher, but as I said to you before, I would like to see a push above the 2.62 territory in order to go higher, and for the downside, drop below the 2.35 territory right here could be nice as well. So if we do fall below this, yes, I will aim for the current lowest point of December, and if that gets cleared, I think it will stay actually the lowest point of December, and if that gets cleared, the forthcoming lower low will be confirmed. Sugar, I talked about this yesterday. If you watched my webinar yesterday, I mean, you would probably remember that, look, I talked about sugar, said, look, we have found good support near that kind of $20 mark, and as long as we remain above the 20.36 territory, I will lean towards that 22 zone. I mean, maybe it's not going to be exactly the 22 territory, but closer to that. And there we go. Boom. Fantastic gift. Happy New Year to us. There we go. We pushed nicely to the upside here. Okay, look. I think the mission accomplished in a way. If there is a little bit of room left here, but this is, you take your profits. When you see something like this, you take your profit, you go away and you enjoy your New Year's celebration. So that's wonderful. That's great. So now the question is, for me, if we can see a push above this barrier, above this 21.89 zone, somewhere around here, and if we can get that, then yes, I'll go for a larger correction to the upside towards that 23 level, or a little bit higher than that, 38.2, something like that. In terms of wheat, something that I picked up previously, so yes, we're still stuck, and I think that it will remain like this. So I need to see a pop up of the 650 zone somewhere around here in order to go higher. For the downside, I need to see a drop below the 596 territory right here, and then yes, we will go from there. Where's that highlighter? Just a sec. No, not this one. Rectangle, that's what so I just wanted to mark this one here for our future reference. So this is my upside scenario. From here, from a downside scenario, drop below this 596 territory would be required. Bitcoin, let's jump into cryptos. Now, Bitcoin is drifting lower. Let me just have a sip of tea. So Bitcoin is drifting to the downside, but still remains above this little short-term upside support line drawn from the low of the 14th of November. Now, what I said to you before, and to be honest, the same analysis is still valid. I need to see a drop below this upside line in order to consider a bit of a move lower, and for the upside, a push above the 44,779 territory, somewhere around here, basically the highest point of December. Yes, if we get that push, then yes, a forthcoming higher high will be confirmed, and I'll go further north. BitcoinCash, this is where the tricky bit comes in. Basically, BitcoinCash did find good resistance, and BitcoinCash seems it is in a range. So where the upper side held nicely, And that means that we are drifting now to the downside. If this falls below, somewhere below this 245 territory right here, well, I could consider a bit of a move lower within the range, because again, as I said, in the range where we fail to stay above the upper side of this range, and we're drifting lower. If we do fall below the 245 territory, somewhere around here, then yes, I will consider a larger move to the downside within that range. Ethereum, so this one is struggling with its 2,407 territory. Okay, so we stayed below it, so we drifted nicely to the downside. However, look, the upside scenario is not off the table yet. We still have a chance, but for that I need to see a push, and I need to see the body of the daily candle staying above the 2,407 territory, and then we could go from there. If we do break this upside line, then yes, great. I will consider a larger correction here to the downside, because we have another upside line here, which we could consider. I mean, it's a little bit on the tentative side, but hey, it's still there. I mean, maybe it could work out. But yeah, but while we remain in this territory, I'm just observing the price action. Litecoin, this one's doing a pretty decent job, I would say, because it rebounded from the lower side of the rising channel, and we pushed above the 200-day EMA as well. So that's all good. However, I'm still targeting that 79.55 territory, which is the highest point, the current highest point of December. So I don't know if we're gonna reach it this year, but maybe, I don't know. But let's wait and see, of course. But if we do push above that 79.55 territory, then yes, I will go towards my upper side of the rising channel. That's it. For the downside, to be honest, I will take a very conservative approach here, and I'll wait for a drop below the lower side of the rising channel, because at the same time we would fall below all my EMAs here on the daily chart, which could be seen as a bearish indication. Polkadot, this one is on an animal, on fire. Look at this. I mean, I talked about this previously. I talked about this scenario, actually, where I said that I'm aiming for, as long as we remain above this little short-term upside line, I'm aiming for the 5.90. Well, there we go. We surpassed that by a lot. So I think a new adjustment here is needed. First of all, I'm going to keep an eye on this upside line here, still drawn from the low of the 19th of October. Yep. And also I'm going to draw a new one, which is taken from the low of the 30th of November. So another one right here. And yes, good potential upside line to consider. So at the moment we're seeing a bit of a correction here. So if we do correct lower, I will, like I said, as long as we remain above this steeper upside line, then there is still potential for some upside. We could end up going back to the 9.60 level here, which is the current highest point of December. Where is that? I mean, in comparison to this, when we were in the 50s here, look. With the hype came in, I mean, everybody started picking up the amount of transactions, I think, on Polkadot did increase and kind of did create demand. I mean, they created more addresses. So, yes, I mean, that kind of gave that spur. It pushed higher, and there is still potential. Don't get me wrong. If you judge by the previous, price action here, I mean, look, where the peak was around here, roughly around that 55 mark. We are currently at 8. So, yeah, there is still potential for this one. Look, at the moment, again, I want to see maybe a bit of a larger correction. I don't know. But if we start popping above the 9.60, then yes, a forthcoming higher high will be confirmed. We could go further north. We could go and maybe test some of these levels, the 10.75. Let me just put this on the chart, something around here. Just a sec. Yep, and something around here as well. So 11.85 as well could be a nice one. But look, let's not rush into things for now. Let's see what's going to happen here. Can we see maybe a little bit of a larger correction to the downside? That would be nice. And then we'll take it from there. But in general, if we start, let's say, breaking the steep upside line, then yes, then, well, we could see a nice move here to the downside towards this other upside support line drawn from the low of the 19th of October. Oh, by the way, let's have a look at how we've performed in 2023. So just from January, from here all the way here, a nice good result of almost 100%. So we did already do the 118 or something like 15%, but right now it came back. So basically roughly around the 100% we did on Polkadot. So if you've invested into that one at the beginning of this year, then yes, congratulations, you're doing fantastic. So let's jump into Forex very quickly. So AUDUSD, we remained above the 0.6821 zone. I talked about this. I said even though we retraced back down yesterday, but we still remain above it. If we continue to trade above it, then yes, there is a chance to see a move towards the highest points of June and July, which are not far from each other, and that's around not far from that 0.69 level. So good potential target. But if we start falling back below the 0.6795 territory, I will consider a larger correction to the downside. Maybe not all the way to this upside line, but initially towards this 0.6690 level. AUDNZD, so there we go. We're flirting with that hurdle. I talked about this yesterday. It's 1.0773. Look, I said to you that I will get a little bit more excited with the downside if we do fall below that area. However, I think I will stick to my crossroads of these two trend lines, and if we do break below those, or at least below this upside line actually, then yes, I will consider a move a little bit lower. And but at the moment we can see that the bulls are not willing to give up yet, so let's wait and see if we can push back above the back towards the 200-day EMA. If we can clear that one, great. More buyers here could join in. AUDJPY, so this one is also quite interesting, and yep, we did decline yesterday. We found good support near this upside line. We have rebounded from it. Well, should I say, after piercing through it a little bit here, we then reversed. We stayed above it. And maybe this idea will work out nicely. As I said to you that basically, as long as we remain above this upside line, maybe we'll see a retracement. And we saw that retracement. We were pushing. It's in. Maybe we could push back up. Especially if the stock market continues to rally to the upside. Looking at this picture, we might see a possible bullish flag here as well. So in a way, there is potential for some upside on this one. If there is potential for some upside on that one, then there is potential for the stock market to go higher as well. However, if by any chance we start breaking this upside line and we fall below the 50-day EMA here and we start shifting towards the 100-day EMA, then maybe this pair actually confirmed a possible double top here, with the neckline being roughly around that 96.50 zone. Now, again, we don't know, because we can only try to apply technical analysis, and try to see what's happening on the fundamental side in the world. And we can go this way, but technicals do help us, as we know, especially I know. It helps me a lot. And if we do break this, like I said, maybe this will end up being a nice double top pattern. Maybe it's not a bullish flag, but again, if you're not comfortable with either of this, then like I said, just wait for a drop below this upside line, below the 50-day EMA, in order to consider a move lower. For the upside, we could see a push somewhere above this 97.58 zone. I mean, roughly around here. Maybe then, yes, we could end up going towards this downside line drawn from the high of the 15th of November. NZDCHF, so we broke yesterday to the downside. We broke the box, and look at this. Look at this beautiful move. We've cleared the box on the lower side here, and yeah, we were staying below it. So in a way, there is a good chance to see a drift further south. I will continue aiming south as long as we remain below the lower side of this box, which is roughly around that 0.5350 level. If we climb back inside of it and we push above the 50 and the 100-day EMA right here on my chart, then yes, I will consider maybe a bit of a move to the upside. NZDUSD also is it found good resistance. That's great. So in general, it did my move. I talked about this previously. I said that if we do pop and stay above the 0.6273 territory, then yes, I will go further north towards the 0.6365, and we've managed to hit that level. Now, for now, I'm not really going to do anything, to be honest. I'm going to leave it, and I want to see how the next year will start off. Maybe we'll go higher. Maybe we could end up testing that highest point of July of 2023. Certainly, that's not the highest point of this year. Basically, the way we've performed this year was, where is that line? Where's that line? So February, January, this is where we're flat for the year. There we go. Now we're flat for the year. Okay, that's interesting. So I think this is how it's gonna end up remaining. So this is the area. Okay, that's absolutely fine. Look, we're slightly in positive territory, but will that remain for this year? Let's wait and see. Oh, by the way, I just wanted to show you with gold, actually. I forgot to show you what's happening here with gold, how we've performed this year, and just out of curiosity for myself even, actually. So this was January, and we made a nice gain here, as you can see. So this is where we started off the year. How much did we do? We did around 10%, or actually right now 7.5%. So okay, not bad, but not as good as the S&P and the NASDAQ 100, of course. Jumping back into currencies, USDJPY looking good here, and you can see, yes, we've drifted lower. We stayed below the 141.55 territory. I talked about this. So in a way, it is kind of I'm leaning more towards the downside as long as we remain below this hurdle. If we push back inside this, above this territory, 141.55, I'll take a neutral stand. I need to see, for my upside, I need to see a break above this downside line, period. USDCAD, we're pushing back up. I think that, yes, Canadian dollar is getting weaker just because of oil, and that's the result we're getting here. So, and also slightly stronger US dollar. Yes, it's helping boost this this kind of pair to the upside here. So we climbed above the 1.3219 level. I talked about this area, and I said to you that as long as we remain above this, I will consider a move to the upside. And to be honest, I'm going to stick to that. As long as we remain above this territory, above this hurdle, I am leaning towards the upside a little bit. USDCHF, ooh, something that I really like. But look, eventually we will have to go higher at some point. But looking at this picture here, I mean, we have ourselves a little, what is it? A morning star, is like shooting star. Just a second. Evening star pattern. No, that's the evening. That's is that morning star? Let me just, I think it was the morning star. Let me just double check. Yeah, that's kind of a morning star. Okay, look, it's more like a pin bar, to be honest, actually, than a morning star. We have a very long tail, so you can see that the bulls really fought hard yesterday, and maybe they will continue, take the upper hand here. So, but we have to wait and see, to be honest. At the moment, I would say, yes, there is a chance to see a move higher, but really I need some sort of a signal, and for me, maybe to consider a bit of a larger correction to the upside. A push above yesterday's high near the 0.8457 territory could be nice. So then, yes, we could go a little bit higher here, and then we could take it from there. So that's the game plan. Let's like I said, let's wait and see. For the downside, I'm not really touching the downside for now, because we already had a decent decline. So let's not test our lady luck. GBPUSD, beautiful hold up near this 1.28 zone. Look at this fantastic level. So I talked about this yesterday and said that, look, I need to see a push, and I need to see the body of the daily candle staying above this area in order to go higher, in order to go for that 1.29 zone or the psychological 1.30. Well, we didn't stay above the 1.28 zone, and it found good resistance here, and we drifted back down. Am I bearish? No, because my bearishness will come from around here, from around this 1.2615. But actually, I will start looking already at some lower levels on a break below the crossroads of these two trend lines. To be honest, even actually this downside line is no longer needed. I think we can just stay with this upside line. So if we clear it, then yes, I will consider a move lower. GBPCHF, beautiful move. Look at this spectacular move. We have drifted nicely to the downside. We found good support near the 1.0720 territory, somewhere around here, 1.0720, 35. We're still getting a hold up here, a slight hold up. Let's see if we can, go further south. I mean, this is what I was aiming for yesterday. Boom, fantastic, good result. Where do we found good support? We found good support around here. Okay, so basically, this is a good level, the 1.0638. I like that one. I really, really do. So, okay, we just still have some room to the downside, but look, I think that this is where we're getting a current hold up. If we do fall and stay below this little territory here, this area between the 1.0720 and 35, then yes, I'll go lower again. If we do climb back above the 1.0783, now I will consider a move to the upside. EURCHF. So EURCHF continues to drift lower. That's all fine. Yesterday we had a spectacular move lower where we found good support around here near this 0.9257. Okay, that's fine. So now my question is, can we see a further move north? Well, to be honest, at this point, look, I don't like these. I mean, when we had already a strong move lower like this, I mean, it's very difficult to overshoot this. I mean, and we want to see what's going to happen here next. So that means we need to take a pause. If you're looking for some higher levels, wait until we get it back above the 0.9407 territory, somewhere around here, and then we could consider a move higher. And then, yes, we will go from there. EURGBP. EURGBP is also quite interesting. I haven't looked at this one for quite a while, but let me get rid of everything and start fresh. First of all, we can see that we continue to oscillate around these EMAs. We're not really shifting way too far from that. And, maybe that could be one of your trading strategies. However, once this pair moves, it moves. Honestly, it has a mind of its own. I don't trade this one because it's really difficult. And if you manage to master this one, congratulations. At the moment, I mean, it happens. Everything happens correctly when I don't trade, when I don't touch this, when I don't trade it. So that's why I thought to myself, you know what? I rather maybe just analyze it and continue monitoring it, and I rather it work out this way than, me trying to kind of, I don't know, do something or try to squeeze something out of it, because it's not really, like, for me personally, it's not really straightforward. And sorry, let me rephrase that. For me personally, it's like the pair which it's something changes when you start trading it. Like, I don't know, emotions kick in or something like that, because it has some sort of random walks. So you need to have a lot of patience. And these, you can see by these swings here, I mean, these are quite big swings. Yeah, you need to have a lot of patience with this pair, and a lot of, I think you need to allow it to walk. It's like this animal which doesn't like to be tainted. I mean, it's nice to look at it, but it's not a domestic. It's not a domestic animal. Anyway, look, for now, what can I say? We've pushed back above all my EMAs on the daily chart. That's great. That's good. Can we go higher? Well, I would say this way: as long as we remain above the these EMAs, yes, I will continue aiming to the upside, especially if we pop above the high of the yesterday's high near the 0.8715, and then we'll go from there. For the downside, I need to see a drop below all the EMAs here on my daily chart, and then I will consider a move lower. I don't know, maybe it's here, maybe it's somewhere else, but at the moment, that's my game plan on this pair. EURNZD. EURNZD is finally moving back down. Look, I said to you, even when I said to you that, look, we did reverse, and yes, it was interesting, but I needed to see a push above this barrier, above this little hurdle, 1.76 zone, in order to go higher. Well, did we get that? No. Instead, we drifted back down. And I threw out this analysis before, and I said to you that, are we going for a lower low on this one? We were still here, and I mean, at the moment we were flirting with this area, and we're now drifting back below it. So in a way, I would say this analysis is kind of working out. Again, I'm not rushing into conclusions because on the weekly chart, it still could be seen as a false breakout, so let's not rush into things, guys. For now, long story short, I will aim lower as long as we stay below this territory. If we push back up, I'll take a neutral stand because my upside scenario within this kind of range-ish is above this 1.76 territory. But at the moment here, yes, I am. I'm looking at this idea here. Let's see if that's gonna work out. And finally, guys, EURUSD. So we pushed higher yesterday. Okay, we pushed higher yesterday. We almost made it to my target, the 1.1150. I'll take that, to be honest. A good result. What can I say? This is something that I was aiming for yesterday. I talked about this, and I said that as long as we stay above the 1.1065 territory, I will continue aiming for this. We moved higher, but then we sold off. But that was a good result still, because you take your profits. That's why I'm saying that always aim for the area, not exact level, because it doesn't always happen. So it comes like this, comes closer to this territory, gives us a tease, and then reverses back down. So this is the point where you need to kind of think, you know what, I'll take my profits and I'll go away. And if you do that, then yes, this is what you can avoid. Now, we still remain above the 1.1065 zone. However, it seems like there is a possibility maybe for a bit of a retracement. However, look, again, it's the end of the year. I'm not rushing into anything. I want to see how this pair ended up being this year. Did we, appreciate against the US dollar or not? Let me just grab the January candle. There we go. Yes, we did. So we showed a good result against the the euro showed a good result against the US dollar. That's in a way great. And looking at this picture here, to be honest, there is still potential for some upside. I mean, judging by this, we saw a strong reversal from below one level. It was back in 2022. We saw that move. We saw that push higher. That now we kind of we entered this year we kind of stalled a little bit. So maybe next year we could see a further move north. Let's wait and see. But for that, of course, we need to see this fella depreciating further south. Let's see if that's going to happen or not. But with the upcoming rate cuts, certainly the market is kind of expecting that the US dollar could drift further south, meaning that maybe the euro could actually continue appreciating against the US dollar. Let's wait and see. And like I said, jumping back into monthly chart, and maybe could go back to that 1.1415 level, something like that. Good potential target right here. Now let me just put this one on the chart. This 1.15 zone, 1.1495, something like that. So 1.15 in general is a nice, good target for 2024. Let's see if that's going to happen or not. But anyway, guys, thank you very much. Thank you very much for tuning in and watching till the end. I really appreciate that. Thank you very much for tuning in and watching this one this whole year. That really means a lot, because this year I've started this show here with Easy Markets, and look, I mean, we're still developing. I mean, we're still working on certain things, and so please forgive me if something was wrong or something maybe you didn't like. So we're still, like I said, it's still a learning process for us. I mean, I think it will be till the end of my life a learning process. But yes, next year we do have something upcoming, and I hope. I mean, we have some special shows. So yes, I mean, I hope you will find those interesting as well. So kind of wait for the announcements. Next week, I will, like I said, I will try to announce that. And yes, I hope, guys, I hope you have a wonderful, wonderful time, wonderful New Year celebration. Celebrate hard, honestly. 2023 happens only once in a lifetime. So, you know, enjoy that, you know, let this year go, and, you know, we'll step into 2024 with more confidence than this year, and everything will be fine. So as always, I want to end my video with the same thing that I always say, guys. Look, stay safe, have your stop losses in place, don't overtrade, risk only what you can afford to lose, and everything will be fine. Thank you very much, and I'll see you in 2024. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.